Joining us here post 9 is Evercore ISI Chairman Ed Hyman. It's great to see you in person.
Sure, thank you very much. Right back at you.
So you're in the recession camp.
I'm in the recession camp. You got the rates, you got an inverted yield curve, and the money supply is contracting. That's Mike Tyson times 3.
Were you encouraged by the trend that we got in the inflation report this morning?
Absolutely. And the trend in inflation, there must be 25 indicators that show a slowing trend. And so this is just one of them. But it's pretty broad spread from wages to rents to aluminum prices to egg prices, online prices. It's everywhere, I think.
Fed still thinks it has more work to do.
It still has more work to do. This business is tough, Sarah, as you know, because you talk to people all the time. But a year and a half ago, the Fed was on the transitory thing, and I was going crazy on the other side because everything I looked at was going up. And now they're on the sticky side, and everything I look at is now slowing. And rent's about to, really come off the boil here. And I think wages might also, but that's a tough one on the wages.
So you think they're going to make a mistake?
They've already made a mistake.
Which is what?
They've tightened too much. You've got, with the combination of rates and quantitative tightening, Fed funds are already 7, inflation's 5, and then the yield curve is massively inverted, not just a little bit. Bond yields are 3.5. Fed funds are, 5, 6, or 7, and then the money supply is contracting, and done that since the 1930s.
I'm glad you brought up money supply because it is shrinking everywhere but China.
Right.
And there is this ongoing debate that it's some monetarist argument that died 30 years ago. Yeah. It still gets discounted. Why, do you think?
Well, Milton Friedman, there's a fight between sort of the liberals and conservatives. The liberals are sort of anti-money stuff, and he sort of lost his way. He was a rock star in the 70s because money was picking up and inflation would pick up. But, Powell has said that he does not take the monetary aggregates into consideration, period. I'm going like, whoa. And it's okay, when money growth is, 4, 5, 6, or 7. But when it's 30, like it was a year and a half ago, you're going to get inflation. And now it's -5, which is the biggest decline in a very long time. So we'll see. But today's inflation news isn't nice for me to have sitting here with you as somebody who's been expecting inflation to slow, and it's been a little sticky.
So I've tried pushing, Tom Barkin of the Richmond Fed this morning on the fact that the trends are all moving in the right direction on inflation. Bank of Canada decides to pause and sort of let it come down, and he said, look, like there's still evidence that it is way higher than it needs to be, and pockets like services and rent and others that are worrisome.
Yeah. So I think the one thing, Sarah, to bring up at this point is that it takes a long time for rates to work. The one in my head I like the best is to turn a tanker takes 10 miles, which is, you think about that and try and translate it to,
long and variable lags.
Long and variable lags. And so, I've seen enough. I know where this boat's going.